Here's how to identify profitable consolidation patterns in trading. First off, consolidation patterns is probably one of the first chart reading skills that you will need to master as a beginner trader, right? Now they can go by different names. They can be called corrections. Same thing for me as a consolidation. There are various different types of these consolidation or correction patterns as well, and different analysts might call them by different names. Whatever the case might be, I think as a beginner trader, it's really important just to focus on the actual shape of these patterns, right? So on my chart here in front of you, I've labeled or basically drawn diagrams of some of the more popular ones. For example, flags. In this case, a bullish scenario, price could move upwards, let's say during a strong trend, and then slowly start grinding its way lower again, correcting lower, going counter the bullish move to the upside, and typically tracing out in a channel. All right, so then once price then breaks out of that channel to the upside again, we get a trend continuation. So it could also be called a trend continuation pattern. Now, the more popular name for these type of patterns are flags, but eliticians would, for example, tell you that they're called zigzags or double zigzags. Whatever the case might be, when this pattern basically ends, price tend to break out above this upper trend line, and analysts or traders would typically want to see additional confirmation from indicators to confirm that a continuation has indeed taken place. Volume is a very popular indicator that traders would use. If a price breaks out of the top of a flag and a bullish example, for example, with a lot of volume, then that's typically a good indication that a trend continuation is actually occurring. Next up, we have ranges. Again, this is just a bullish example. Let's say price was moving into a high and then starts moving sideways, up and down, typically creating level tops and level bottoms, also typically within a range, but this time moving sideways before a breakout occurs and a trend continues again. Same thing over here with ranges. Traders would typically use volume, and if volume, or look at volume, and when volume accompanies a breakout to the upside and there's an increase in it, that could be a good sign that the trend's actually, getting ready to resume. Then we have triangles, or some might call wedges. We have ascending triangles, descending triangles, as well as symmetrical triangles. Right, so all these various different type of consolidation patterns or corrections, like I mentioned, some might call it, might be a little bit difficult for the untrained eye in the beginning when you're a novice trader to go ahead and spot on your charts. But again, it's a crucial part of your chart reading skills that you'll need to master in the beginning. Right, that being said, visually going through your charts, whatever the time frame might be, and then trying to identify these patterns is a really good exercise to go through. However, it might get complicated at some stage, depending on the time frame that you're looking at. Maybe you don't have the time to go visually try and spot all of these patterns, which is why I use the Pure Pattern Trader software. That's available here at Ninjacators, and basically it goes and identifies all of these consolidation or corrective patterns for you automatically. Now, I just quickly want to bring up a very important piece of the puzzle when you want to go and identify these patterns, or let's say software going ahead and identifying these patterns for you, is my market analyzer. I can set that up using different instruments for all of the different futures markets that I would like to follow, as well as set up a scanner that would go ahead and identify patterns for all of these continuation patterns or corrections or consolidations for you automatically. Now, once it does identify a pattern, your scanner would then go ahead and alert you very early that one of these patterns are present on whatever time frame you want to look at. And then once that pattern fires off, you can then just quickly, or that signal fires off, you can quickly go to your chart, and let's say on the NASDAQ, for example, there were recently quite a few ascending and descending triangles during a very strong trend to the upside, which all were automatically identified on the chart. There were nice cup and handles, which I didn't show you in those diagrams there as well. But either way, they were all automatically identified by the market analyzer ahead of time, alerting you that these patterns are present, so you didn't have to go physically look for them yourself. Does all the heavy lifting for you, and then you simply go to your chart, click on the corresponding pattern that's been identified by your scanner, and then trade them. All right, we also have a nice feature built in here where, for example, let's have a look at this pattern over here, for example. Where we had a beautiful cup and handle pattern form where we have an additional indication on the top that uses volume to tell me if the breakout on the top of this pattern is actually accompanied by a lot of volume. In this case, we had a nice peak of volume here, and then that would for me signify an entry. Once price actually broke out of the pattern right about this candle over here, I would have got a signal on my market analyzer or alert on my market analyzer for the 1 minute time frame, which is one of my favorite charts to scalp patterns with, or time frame to scalp with. I would then go ahead and click on whatever it told me. Did it pick up a cup and handle? Was it an ascending descending triangle? Whatever the case might be. If you like this indicator, then click the link below this video and consider joining our Ninjacators Fast Track program. Thank you for watching, and I'll see you in the next one. Take care and goodbye.